For as long as most of us can remember, the Bitcoin market has had this brutal and predictable rhythm, right? You get a massive run-up and then a devastating crash. But what if that's all changed? We're going to dive into some really fascinating evidence that suggests Bitcoin's famous cycle has mutated into something entirely new.
I mean, this is the big question, isn't it? The one on every single investor's mind. The whole idea of a long, drawn-out crypto winter, that period of deep, painful losses, it's defined market strategy for a decade. But the recent data suggests we might be playing by a whole new set of rules now.
Okay, so to really get why things feel so strange right now, we first have to remember what normal used to look like. The old rulebook for Bitcoin? Well, it was simple, and it was violent.
You can see the pattern right here, can't you? These insane peaks in 2013, again in 2017, and then 2021. All of them were just driven by massive hype. But each and every time, they were followed by a crushing winter. We're talking about a prolonged bear market that just wiped out fortunes and tested the faith of even the most hardcore believers. This wasn't just a dip, folks. This was a full-blown crypto ice age.
And that was the number that really mattered. A drop somewhere between 75 and 85% from the all-time high. That was the terrifying signature of a true crypto winner. It was the market's giant reset button, the event everyone learned both to fear and expect.
But then this last cycle happened, and it didn't just bend the rules. It felt like it shattered them completely. That deep freeze everyone was bracing for, it just never arrived.
And this just perfectly illustrates the difference. Instead of that classic, brutal 80% crash, the market got a much milder correction, just over 50%. It was shorter, it was shallower, and honestly, it was completely out of character. This anomaly is what sparked a whole new theory.
And that's when analysts started calling it the mutated cycle hypothesis, a brand new theory to try and explain this really bizarre market behavior.
So, what is it? The core idea is that the big money, the institutional players, flowing in through those new ETFs has fundamentally changed the game. Think about it. These large professional investors, they don't chase hype the same way retail investors do. They tend to buy the dips, and that creates a kind of safety net, a floor during downturns.
I love this analogy. It really captures the idea perfectly. If the old Bitcoin cycle was a wild, untamed rocket, spectacular launch, but just as likely to crash and burn, this new theory suggests it's more like a powerful, professionally piloted jetliner. It's still climbing, still gaining altitude, but with way less turbulence.
Okay, but a good theory needs some good evidence, right? So let's get into it. There are about 6 key clues that really support this whole idea of a mutated cycle.
Clue number 1. Diminishing returns. Just look at the growth from one cycle's peak to the next. It's shrinking and shrinking dramatically. We went from an 8x growth multiple to 4x and now to less than 2x. This is a huge sign that the market is maturing. Those days of astronomical, just face-melting gains are probably behind us.
And clue number 2 is just as telling. The growth from the most recent halving event to the cycle peak was only about 110%. I mean, only! Compare that to past cycles where we were seeing gains in the thousands of percent. That top-of-the-market euphoria, it just wasn't there this time.
Which brings us to clue number 3. The driver has changed. The previous big cycle was all about retail investors piling in, driven by that classic fear of missing out. This most recent cycle? It's been all about institutional money pouring in from ETFs. That's a fundamental shift in who is buying Bitcoin.
And the final clues all point in the same direction. Key on-chain metrics like the MVRV Z-score, which basically measures if Bitcoin is over or undervalued, it never reached those historic red zones. The Fear and Greed Index, it never even hit extreme greed. And importantly, the market became dominated by professional futures trading, not just direct buys from everyday folks. It all adds up to a much tamer, more controlled market.
But look, of course, not everyone is convinced. You have more traditional, old-school analysts, like the folks at CryptoQuant, and they're sticking to the old rulebook. They argue this isn't a new paradigm. It's just a temporary bounce, a little relief rally before the next major leg down into a true crypto winter.
So who's right? Well, to figure that out, we actually need to look beyond the charts and into the wider world, because there are several major events that could be acting as powerful tailwinds for this new mutated cycle.
There are 4 huge factors in play.
First, you've got geopolitical conflict, which is pushing investors towards so-called safe haven assets. Second, there's the potential for a new pro-growth Federal Reserve chairman, which could mean easier money. Third, and this is a big one, landmark crypto regulation like the Clarity Act could finally give big institutions the green light they've been waiting for. And finally, it's an election year, and that could create a very friendly environment for crypto.
Any one of those could be a major catalyst. Together, they could be explosive. But according to analysts, there is one key technical level that will be the market's next great test, the one that could prove the mutated cycle theorists right once and for all.
And that test is the $80,000 price level. It's more than just a big round number, though. It represents a very specific technical feature on the charts. It's called the CME gap. Think of it like a blank space on the chart, created when the price fell so fast that no trades actually happened in that range on the big futures market. Now, historically, markets have this strong, almost magnetic tendency to return and fill those gaps. So if Bitcoin can reclaim this level, it would effectively end the whole technical bounce debate and signal a major trend reversal.
So that leaves us with the ultimate question. Has the arrival of all this institutional money fundamentally cracked the code of Bitcoin's wild cycles, creating a more stable, mature asset? Or are the old-school analysts right, and is this just the calm before another familiar, devastating storm? The battle for that $80,000 gap may just give us the answer, and very soon.